Adrian, I remember last reading in an interview of yours, and you talked about as to how it's not two or three things in the India budget that is going to please you, but a basket of things. Has the finance minister managed to please the FII community like you?
I think largely he's done things that are pretty clear in the direction that most investors or businesses would like, not just foreign investors, but local investors as well. And I think those things are quite clear. Basically, there's a commitment towards lowering and streamlining the corporate tax rate, not immediately, but over the next 5 years. There have been some details that would have been helpful. But broadly, a commitment to do much better on corporate taxation. The second thing that's been interesting is that they have ceded or they have increased the portion of funding that would be given to the states. I would take it that this would be a sweetener effectively to getting buy-in for the pan-Indian GST. Then that's pretty crucial. So in itself, giving state greater say and greater funding is not necessarily good or bad. But when taken as a whole with the implementation of GST, I think that's a very positive sign. And I hope that over 5 years, some of these pieces that are announced clearly now would fall in place nicely.
Adrian, good morning. Did the overall tone towards reforms please you as well? Because in certain cases, he's gone a bit more than what people were anticipating. The devolution to states, for example, as you mentioned, GST was on expected lines as well. Did you like the overall tone towards reforms in the budget?
I think so. I think so. There's a lot to go through in the budget. I mean, another thing that's interesting is the increased capital expenditure spend. I think with most, the headline numbers are interesting, but with most of these public policy issues, not just in India, but all over the world, the difficulty is to making sure that all these policies translate into results that you intend to have. There's always some leakage, there's always some bureaucracy. And I think the challenge now is to make sure that the impact of some of these policies are fully felt in the way that is anticipated. So I think the delivery or implementation is key.
Adrian, there's a clutch of private banks that you've been bullish on. HDFC Bank, Kotak Mahindra, ICICI Bank. With the finance minister now talking about more autonomy to PSU banks and funding for them as well, would you add any of the PSU banks to your portfolio?
We will have to wait and see. I mean, the PSU universe of banks is large, is fragmented, and what happens or what is good for one bank is not necessarily good for another bank. So I think in case in India, we do need to have a look and understand the full exercise of recapitalization first. I think the recapitalization amounts that were pledged were smaller than what was than some numbers that were bandied about earlier on. So we'll have to wait for the for these things to come true. It's not just capital; it's also the level of professionalism, the level of execution that's crucial. And I think that if you look at a 10, 15-year track record, you can see that the private sector banks are leaner, they are better run, and they are a lot more focused on the profit motive. Profit isn't everything, but the private sector banks have shown strong delivery of results.
Adrian, infrastructure is Prime Minister Narendra Modi's pet theme, and in this budget as well, we've seen a whole host of announcements come in with regards to the road sector, etc. How are you playing this theme? Is it via cement, which you already hold a lot of and have an overweight position?
Yeah, we do hold a lot in cement companies, Ambuja, Grasim Ultratech. It is very important. The infrastructure play is a very strong one. And it is very interesting because you have a lot of companies that play off that sector and the anticipated sustained run in that sector that you could expect over 5 years, 8 years, 15 years. But we have chosen to go through the cement route because that's a place where we find companies that we are comfortable with. These companies are pan-Indian in nature. they have strong balance sheets, and a strong collection of assets that they can deliver on. So we have decided to go through. If you were not to the in a gold rush, you can choose to go with the guy that mines for gold, or you can go with the provision shop that sells gold picks. So basically, we've gone to the guy at the convenience store that sells supplies, and in this case, it's cement.
Yeah, I wouldn't blame you if you even were to extend that analogy into actual gold companies as well with a country like India, Adrian. But, the other question that I wanted to ask you was that financials is about 22% of your overall portfolio weightage. What else is the big overweight currently? And is there a change in stance on that position post the budget? Are you adding, subtracting anything from the key overweights because of the budget?
No, generally, the short answer is no. Within financials, we are actually, it's one of our larger positions, but it's actually underweight compared to the amount of financial components within the MSCI India, a benchmark that we're measured against. So it's an underweight position, despite it being a large position, absolute position within the fund. We haven't changed our stance with the respect to the budget, but that's something that we rarely do. The budget's about a macroeconomic environment. It's about the direction of the economy and the dynamics of the market itself. It's very important in the sense that it gives you a climate in which companies operate in, and it gives you a direction over the medium term. But ultimately, what's important to us is picking stock. And stocks are more affected by companies and the people, the management teams that run these companies than they are by the macroeconomic factors. And what we do is that we effectively try and boil macroeconomic developments down to one or two stocks that we like to buy. And in that case, although the macroeconomic environment is important, ultimately we're still investing and backing people that run companies. And this budget is no different.
ITC, Adrian, not quite a pure FMCG, but the government seems to be coming hard on tobacco manufacturers and sellers. Would you change your stance there? And be IT something that you track very closely. What's your positioning within the IT sector?
ITC, good company. It will always be under pressure given what it does. Tobacco is an important source of income for most governments, not just in India. And the long-term trend is that tariffs will rise. They can rise in a steady fashion. They can rise in a lumpy fashion. They can rise without paying attention to tobacco interest or fiscal revenue. But in this case, we feel that the government will be sensible on this, will be constructive on this. And ITC doesn't just have tobacco. It's got foods business. It's got one of the largest hotel chains in India. And it's got a sizable packaging business as well. So ITC is more than just tobacco. Although I hear what you're saying in the short term, there is some additional pain there from tobacco tariffs. With respect to IT, I think you haven't seen specific policies that impact IT. IT's big influencer going forward remains its ability to be competitive against global multinationals. It will also be affected by margins, by ability to train and retain staff, and by the forex volatility that comes into play, given that it's a big exporter of labor, and there's a large arbitrage in cost differences. So IT's got other things that challenge it, that it does very well to meet. And I don't think the budget impacts our view substantially on the IT companies in India.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.